Welcome back to the Malaysia Money Matters show. It's the 18th of July, 2025. Today, we're doing a deep dive into the latest economic developments. We've got everything from major infrastructure projects changing Malaysia's landscape to those global trade tensions and, of course, shifts in the financial markets. Our mission, as always, is to pull out the key insights for you, give you that shortcut to being really well informed. So let's jump right in with Malaysia's economic pulse. There's a projection out for moderate GDP growth, around 4% for Q2 2025, with the full year maybe closer to 3.8%.
That's right. And what's particularly striking is how that fits with the view on Bank Negara Malaysia's interest rate policy, the overnight policy rate, or OPR. The thinking seems to be one cut and done for the year, keeping it at 2.75%. That decision back on July 9th, it looks like a preemptive move, really, trying to protect growth. They seem to be banking on strong domestic demand to kind of cushion things against external headwinds like, those U.S. tariff threats we're hearing about. And that rate cut, plus an earlier tweak to bank reserve requirements, well, that combo could actually lift GDP growth maybe by up to 0.45 percentage points in the next, say, 6 to 12 months.
Right, so the central bank is being proactive. And it sounds like strong domestic activity, especially infrastructure, is key to this resilience. Let's dig into that construction and tech boom because it seems quite significant. I saw CBH Engineering landed a big contract, RM $172 million, for a data center's electrical system in Selangor.
Yeah, that was a major win for them, especially being their first big one since listing. Stock price jumped too.
So is this just a one-off or is it part of a bigger trend? What's driving this data center push?
Oh, it's definitely a broader trend. Systemic, I'd say. If you look bigger picture, Gamuda and MN Holdings are also seen as likely winners in, potentially RM 10 billion worth of upcoming data center projects, some linked to big names like Google via Eco World Development and Sime Darby property.
Okay.
Gamuda seems positioned for the main building work, the core and shell. MN Holdings more on the mechanical, electrical, plumbing side. And they're also benefiting from Tenaga Nasional investing more in the grid.
Makes sense.
Malaysia's got relatively stable power, good connectivity. It's becoming quite attractive for these huge digital investments.
And beyond data centers, Gamuda's order book looks strong too. Maybe a big Perak water supply deal coming.
Exactly. Potentially RM 5 billion there, offering long-term recurring income, which investors love.
And other big projects are moving. MRT Corp trimming lands needs for the MRT3 Circle Line, aiming for completion end of 2026.
And the Penang Light Rail Transit, that's got the green light too. The first package alone is, over RM 8 billion? Huge investment. And, speaking of regional impact, look at Johor Bahru property prices. They surged in the second quarter.
Oh, yeah.
Service departments were up over 20%. A lot of that seems driven by the launch of the Johor-Singapore Special Economic Zone, the JSSEZ. It just shows how these big strategic plans, plus infrastructure like the rapid transit link to Singapore, can really attract buyers, especially as costs go up across the causeway.
Interesting connection there. And on the state-level strategy, Sabah's making moves too, right?
Yeah.
With SMJ Energy buying into that Petronas floating LNG facility.
Yes, a 25% stake in a multi-billion-dollar project. It's expected to start operations late 2027. It's really a strategic play by the state. It's not just about revenue, it's about building local capability, creating skilled jobs, ensuring the benefits stay within Sabah, building that long-term economic strength.
Got it. Okay, beyond these huge projects, other company shifts.
Yeah.
The Employees Provident Fund, EPF, adjusted its stake in Sunway Construction.
Yeah, they're no longer a substantial shareholder. That's a notable institutional move. But, Sunway Construction itself has been doing well, securing over RM 2.9 billion in contracts this year.
Yeah.
Data centers again, transit projects.
Right. And we also saw NextG get a contract extension for passport chips from the Home Ministry. TSM Global is turning the Easton Hotel KL into a Marriott in Petaling Jaya. Quite a big renovation.
RM 100 million.
And Sunway's also looking abroad, securing land in Singapore for residential development. A joint venture, big value there too, RM 2.33 billion.
Lots happening. And just to round off the local Malaysian news, the government increased the August reference price for crude palm oil, which bumps up the export duty to 9%.
Okay, interesting timing for a CPO duty hike, especially with global trade being so, complicated right now. Because that brings us to the big international news. The U.S. president announced a 25% import tariff on all Malaysian goods starting August 1st.
Yeah, and this introduces a huge amount of uncertainty. One analysis suggests Malaysia might have a maybe 55% chance of negotiating that down, perhaps to the 15-19% range, similar to what Indonesia managed.
Okay, so there's hope for negotiation.
There is, but Malaysia's main business group is warning about, significant risks to export volumes, supply chains getting disrupted, investor confidence taking a hit. One economist even suggested Malaysia's GDP growth could dip below 4% this year because of these tariffs. And you've also got competition from companies maybe moving production back home or shoring.
That's a pretty serious potential impact, below 4%. So
Yeah.
beyond talks, what can Malaysia realistically do? Diversify markets faster, boost domestic demand even more.
Both, likely. It really forces that strategic rethink. It's interesting. India seems quite confident about diversifying its oil sources, managing potential sanctions on Russian supply. It shows how resilient nations are constantly adapting.
Right, always looking for alternatives.
Huh.
So how are financial markets reacting to all this turbulence?
Well, looking globally, the U.S. dollar actually bounced back a bit after some brief speculation about the Fed chair's future died down. European stocks got a boost from strong earnings, like from Taiwan Semiconductor, huge profits thanks to AI demand. Although they're also cautious about future tariffs.
Understandable.
Meanwhile, Standard Chartered is actually predicting the U.S. dollar will stay weak for the next year or so. They see that as generally positive for Asian stocks, outside Japan anyway.
Why is that?
A weaker dollar helps Asian exports, makes them cheaper globally. It also eases debt burdens for companies owing money in dollars. Stanchart seems particularly keen on South Korea and China, citing stimulus measures and their AI growth stories.
Okay, interesting perspective. Now, related to the U.S., the New York Fed President John Williams, he commented on the tariffs too, didn't he?
Yes, he said the impact is really just beginning. He expects them to push U.S. inflation up maybe a percentage point over the next year or so, and also slow down the U.S. economy.
So more inflation, slower growth. What does that mean for the Fed's own policy? They just held rates again.
Exactly. It puts them in a tricky spot. U.S. retail sales actually looked strong in June, but maybe some of that was just higher prices because of tariffs starting to bite.
Right.
The U.S. president keeps criticizing the Fed for not cutting rates, but, Wall Street keeps stressing the Fed's independence. It's a constant push and pull.
All right. Okay, shifting gears slightly, back to Malaysia. There's a move to strengthen e-commerce regulations. A new bill expected early next year.
Yeah, it seems aimed at strengthening the legal framework. Things like addressing concerns about foreign platforms operating here without a physical base, and also looking at automated decision-making systems, like algorithms.
Makes sense in the digital age.
And it fits into Malaysia's wider strategic goals.
Hmm.
The Science, Technology, and Innovation Minister has been talking about unlocking high-impact investments, green tech, deep tech, even exploring advanced nuclear, like those small modular reactors or SMRs, and trying to position Malaysia as a hub for advanced materials.
Interesting. And speaking of national strategy, China's President Xi Jinping apparently raised concerns about too many provinces rushing into the same new industries, like AI and EVs. Worries about overcapacity there.
Yeah, a potential challenge when everyone chases the same shiny object.
So, quite a lot to digest today. What really stands out to you from this deep dive? We've got these global trade pressures, especially the U.S. tariffs, bumping up against really ambitious local infrastructure spending and careful moves from the central bank. It paints a very complex but also dynamic picture for Malaysia's economy, doesn't it? The big question seems to be, will that domestic strength be enough to navigate these global headwinds? Or will we need more policy shifts? Something for you to ponder. For more deep dives into the financial world affecting Malaysia, remember to subscribe to the Malaysia Money Matters podcast. Thanks for joining us. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.